Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a stock highlight video. And if you're interested in any of the services I provide, please check out the links in the description below for the Patreon and Discord. And if you would like for me to do a highlight video just for you, make sure to become a member of any of the three services I provide, whether that's the day trading, swing trading, or tutoring services, and I will make a highlight video of any asset of your choosing, whether it's a stock, crypto, or commodity. Just become a member. Okay, so I was actually recommended to take a look at the VIX volatility. Now, this is going to be a little different from my other highlight videos. Essentially, essentially, simply put, the VIX is not really meant to be charted, at least not in the same way that you would normally chart an asset. Now, you want to watch the VIX mainly off of the daily time frame because it's very important. What the VIX does, it's giving you a 30-day expected report on volatility. So an expected volatility over a month, over 30 days. And that's a good thing to keep your eye on because there's another name for the VIX, and it's called the fear index. And what it's measuring is the stress levels of the market. And when stress becomes high, when fear becomes high, you'll see the VIX tend to really pop up really hard. Okay? But you have to also keep in mind the VIX is designed, it's designed to go down. Okay, so a lot of ETFs, a lot of people don't understand this, leverage ETFs, a lot of these future ETFs. So if you're looking at like SCO, which is like a short ETF on oil, or Cold, KOLD, which is also a short ETF on natural gas, they will spike up when those assets go down. However, those contracts, that ETF is designed, just like the VIX, to squeeze down. It goes down over time. So eventually, this contract, quarter over quarter, will keep rolling down to zero, and then a new ETF, or a new contract, I should say, will be made. Okay, so you never want to hold the VIX over a long period of time. No one should be doing that. I won't say no one's doing that, but no one should be doing that. However, when you're watching the market, so let's say you're watching the S&P and you're seeing, okay, well, the S&P is coming to a zone that's extremely overbought. It's extremely overbought. It needs to pull back, and it's coming to a major resistance zone, and it's going to be a hard pullback. Or you're expecting really, really bad news to drop. Let's say the Fed is going to speak and they're going to say bad stuff. Well, what you would do then to profit off of that scenario is you would buy the VIX. You would buy bullish contracts on the VIX, and when it would go up, you would make a very good amount of money because these are naturally levered assets. The VIX is naturally levered. Okay, so you need to understand that the VIX is designed for shorter term trades, and it's extremely risky because if you're wrong and nothing happens, well, holding these contracts has a cost to it. Okay, you're going to be burning essentially, because if you're not going up and there's no volatility, even if you go down in the markets and there's no major volatility on the descent, the VIX won't go up because it's not inverse, a bear inverse to the S&P. Okay, the S&P can go down, 1, 2, 3%, but if it's in a, what I would say is in a controlled way, a very slow, methodical way, and there's very little volatility, well, guess what? VIX ain't gonna go up because the S&P is going down. All right, so you got to be very, very careful if you're trading the VIX. But you can make a lot of money if you understand how to deal with the VIX, how to actually trade it against the markets, and understand how to measure out the fear and uncertainty of the markets at different times. And other than that, that's pretty much it with the VIX. There's really not much else to say. You shouldn't be looking at the VIX chart and because it broke a trend line, you should buy it or sell it. That's not how it works. It's not designed that way, and that's why the chart looks the way it does. So there's nothing here for you to actually do technical analysis on. You should be using the VIX as a measuring stick of the volatility of the fear in the markets. How comfortable are we? How uncomfortable are we? And that's the same thing I do. So if you're in the swing trade service, you'll see often that I'll buy, SCO, right? So let me just go SCO real quick just so you can get a visualization. So it's the Pro Shares ultra short on oil. So if I think oil is going to go down, you'll often see I'm going to buy it, because they'll have these times when oil spikes down, you have these massive moves up, right? And you got to remember, these are automatically levered assets. So look at this move up, all the way up almost 500% here, right? So you'll see me buy these positions, and I'll hold it for anywhere from a day to maybe 2 weeks, and then I'm out, right? Because I'm looking at the oil chart. So I'm looking at the oil chart, and I'm seeing, okay, so oil, actually, let me go to my other chart. So oil, I think, is going to come down. So there's a good chance that SCO will go up. And that is what happened. So looking at oil, take a look at this. What I've been saying, it's going to go down, right? And throughout this drop, especially this one right here, you had a nice spike up in SCO. But now because oil is going up, SCO is starting to go down. So you have to really chart the asset that these ETFs are following. So this is a spike up from when oil was going down, and now that oil is going up, it's coming back down, and it's probably going to come down even harder, all the way down sub $20, back to these levels down here. All right, it's the same thing with the VIX. You have to be able to measure out the perceived volatility. How crazy will the markets be acting? So the VIX chart itself is not really that important. Okay, anything you see here is coincidence. Okay, whether it's like, oh, it made a double bump, it's coincidence. Okay, it's not that important. What you should be watching is the S&P, because that's what the VIX is following. So if there's going to be a lot of fear in the S&P and we're going to be coming down hard, then you want to look to buy the VIX. All right. So that's how, I mean, I know this is kind of a short video, but that's pretty much all there is to it. But, it was a good question that someone asked, because a lot of people don't know anything about these indexes and how to, or these ETFs, I should say, and how to really look at them. And a lot of people think that you can measure them out like they're normal assets. You can't. Okay, you can't. If you buy this long term, it will go to zero. All right, so you don't do that, and you'll get destroyed when the volatility swings the other way, when you don't have any fear in the markets and you're in a bull market and you buy something like this. You're just going to lose it all. So don't, make sure not to do something like that, and understand that this is more of a, what I would use this as what I always use it as, is more of like a measuring tool, seeing how euphoric or fearful the markets really are. Okay, if I tie that with the index charts like the Dow, the S&P, and NASDAQ, if they're swinging high, if those three are really high up in the air, and then the VIX is down here at the gutter, then I know we're nearing euphoric levels, and that we want to watch for a major spike up in the VIX off of a massive slap down on these equities. And that's why you'll have these really long periods of time of nothing, right? So look at this, like this is a massive period of time of really nothing. So you're talking about from December, so this is December 17th all the way back to around, this was a pretty big spike, and this was okay. So we'll go from here to November. So you have a whole month of nothing, and then boom, you have a massive spike from the pretty much December 17th, and you have a spike of almost 500% as well, right? So this was a good time to see, were the markets flying high? So let's go. Let's actually find out. December 17th to January 2018. So December 26th to January of 2018. Let's take a look at the S&P. What was it doing then? And we'll see what was going on. And we already know it's probably going high. Let's see. So yep. So here we go. So here's December 20 here. Here we are. Yeah. So December 27th all the way until January. And what happened when the VIX spiked up? Well, this spiked up because we had a massive smackdown right here. So we were flying high. The VIX was pretty much a flat line, and then it blasts up because we hit this major resistance level, which is the fair value channel that S&P has traded in since it was created. Hit that top level, got slapped down extremely hard. So for the S&P, this is the extreme slap down. We're talking, that's massive for the S&P. Almost 12%. That is huge. Actually, a little bit more than, probably right at 12%. That is a huge move down over just a couple days. All right. For the S&P, that's massive. All right. So yeah, massive slap down here. And you can see that on the VIX chart where it happened. It spiked up on the VIX chart when they got that massive slap down. Massive right here. Actually, right here. Yep. Big. Okay. And same thing happened during 2020. Massive spike up when the lockdown started. Okay? So you want to use the VIX in that way. Hopefully that answers your questions. Do not chart it. Do not chart it. If you find someone charting this, that is complete evidence they don't know what they're doing. Okay? I'm telling you that it doesn't matter. Like, that is complete evidence. No matter what else they say after, they have no idea what they're doing. You're not supposed to chart the VIX because just look at it. This is not what you do. All right? It's coincidence. It's coincidence. What you want to be charting are the U.S. indexes, and then when you see that we're going to come into major resistance levels, or there's going to be fear gripping the markets, then you want to start looking for the VIX to look to play a short-term bull play on the VIX. All right, everyone. That is it. That is it. Not the best highlight, I guess. More of like an educational thing on the VIX. Hopefully you enjoyed that. You learned something new if you didn't know. And yeah, if you have any questions, make sure to leave a comment on the video here. And also, if you're not in the Discord, join the Discord. It's totally free, and it's the best way to get in contact with me. And we have a ton of cool people in there of all levels, from beginners to pretty advanced traders. So you'll learn a lot and meet a lot of cool people. And if you like the content, make sure to give me a like, a subscribe, maybe a follow or two. And yeah, that's it. Everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.